Hi there, welcome to the Market Minute. Again, I'm hoping everybody is staying safe. I know as this crisis goes on, it's going to be very interesting. I, for one, am hoping that we can get to the point where we can get a simple haircut, but that's another topic. In the meantime, the Bank of Canada came out with their monetary policy report for April. I found this very interesting. I'm not going to say it's an exciting read, but it's an interesting read. Here's a quote. The report will provide an account for the stewardship of monetary policy and will be useful for those who want to know more about monetary policy for their own decision-making purposes. So as an investor, could be there is some very interesting information. If you'd like a link to that, send me an email. We'll send you a link. Likewise, happy to share Newport Private Wealth just came out with their first quarter review. So if you'd like a report, if you'd like a copy of this report, it's a video, it's available on YouTube. I found it very fascinating how Mark Kinney went through how Newport is reacting to these current market environments and what opportunities they're taking. That's the most important thing. You know, we all know that the stock market had a massive correction, biggest collapse in, since 1930s. But within that, there's also opportunities. And one of the most common things that when we talk about diversified alternative assets investments, the most common question I get is, well, what is a non-correlating asset? So I thought this was a great opportunity to just shed some light on what a non-correlating asset is and why we recommend a percentage of your portfolio is well suited to be placed with alternative assets that are not trading on the stock market. Well, the easiest way to explain that is REITs. A REIT is a real estate investment trust. There's both public and private. So let's take a look at public REITs. Public REITs doing quite well. And then boom, this is the TSX, by the way, S&P TSX REIT Index. And you can see here, mid-March, boom, crashed down. Now the change, and it bounced back, but this is a classic example of what we call volatility. The high was 370.78, and it went down as low as 198. So 370 down to 198.2. That's a 46% correction or change in value. Now, it's come back, and I wouldn't be surprised if it goes all the way back to 370. Not my area of expertise, can't comment on that. But this is exactly what I mean. When you see a big dip and up and down roller coaster ride like that, that's called volatility. So what a private company does, they're not trading on the stock exchange. So let's take one of the REITs that we've approved is Centurion Apartment REIT. Centurion, people can't go in and just push a button and start selling the stock. Therefore, the valuation doesn't go up and down on a daily basis. That doesn't mean they're not immune to the impact of the COVID crisis. I mean, they own 10,000 apartment units, 75 different buildings, and buying more. So people may have some rental disruption, but the valuation didn't go down by 46% in a matter of days. So again, it doesn't mean one's better than the other. It just means it's good to have a combination of both. And that's a great example of what a non-correlating asset is. So when we talk about adding non-correlating assets to the mix, that's what we're talking about. If you'd like to learn more, send me an email or give me a call. Happy to talk with you. And if you like some of these reports, again, happy to share those. In the meantime, stay safe and have a